Okay, recording this video on Sunday, the 22nd of March, 2020. It's just gone 12:38 p.m. Chicago time. Do hope you are doing well. So this video I want to talk about next week's trade. Is the worst over? Have we felt the full force of capitulation? Are we going to bounce? I'm going to review my charts and show you what I'm seeing. But before doing that, just to say I hope everybody is well. We are in very bizarre times. I hope you're coping. Most everyone probably is in isolation, confined to some extent right now around the world. Everybody that listens to me, I suppose. Just to let you know, we even have restrictions happening here in Hawaii, on the beautiful island of Kauai. I mean, it's not a bad place to be stuck during a global pandemic. And our decision, 6 or 7 weeks ago, that this is where we'd hold up rather than heading back to Australia, I think for the time being is working out okay. With the exception of yesterday, they decided to limit the number of people going to the beaches. Apparently not enough social distancing happening on the beaches, so they're selling tickets and limiting the number of people going to the beaches. So $5 per person and $50 per vehicle. I don't know what I think about that. I will obviously comply with whatever the regulations are. I don't want the National Guard to be called out on me, but it's crazy. It's crazy even here. It's probably a lot crazier where you are, so stay strong. So talking about crazy, the markets are crazy. We're down 33%. This is the little percentage change chart I've showed you before. Here's our number, kind of down here, 32, I think, on the S&P index. I think it's a little bit worse, 33 on the Dow. We're in, uncharted territories here. Is the worst over? Is the capitulation over? And throughout this whole decline, what I've been saying is I'm looking for the exhaustion cell on the 15-minute chart. And we still have not got that. So my kind of hypothesis for next week is that we should see that signal next week. I don't know what it's going to come to in terms of bad news that is going to generate that final flush, capitulation flush. I'm reading some reports that are talking about potentially closing markets and so on. I suppose that's on the table, but at some point there must be a piece of news that kind of comes out that flushes everybody kind of out. So this is the 15-minute chart, and better momentum kind of down here, and I've referenced this a lot. These are exhaustion buy signals we had at the top of the market. To mirror that, we need exhaustion sell signals kind of going on down here. I'm still using this at es.d equals 106xc symbol on TradeStation, which is rolling on the 6th day before expiry instead of the 7th day. The 7th day looks like this. Just if you look at the better momentum chart below the line, and I'll show you flip between the two. There's a little bit of change here, and our running signals. Let me do it this way. There we go. You can see between those charts what's happening. So I'm preferring to use the roll on the 6th day of the chart rather than the normal roll on the 7th day that TradeStation does. But that's, for me, is going to be important, and I'm expecting to see that this week because what we're doing is we're putting in a left shoulder. So a little bit of strength this week. I talked about the importance of the 2470 level. If we broke above that, that was that little high of this kind of strength that we had. If we broke above that, we could easily go into a situation where we have a burst of activity, a short covering rally, and kind of come down. But no, it's held. This pullback is rolling down. So that's the intermediate time frame on the 15-minute chart, which means that's a 45-minute time frame. So we're rolling down, pullback to end of trend there. And cracking 2260 is that what it takes in order to get that exhaustion sell signal in? On the 45-minute chart, there's that pullback level. So the intermediate chart on the 15 is the lowest time frame on the 45. So that's what we're doing. We're putting in pullback to end of trend. And timing-wise, we've had the cyclical cross on better sine wave. So we're hunting for that low time. The time is now that we should be finding that. And again, we haven't had on this chart an exhaustion pattern to mirror that 45-minute chart. Going up another time frame, the 135 and so on. Again, it's all down, down, down. We're not even close to going back to put in pullback to end of trend on the lowest time frame here. And cycling up to the highest time frame chart, better sine wave, again on that intermediate time frame, being caught by that is going to be important. So I don't know what it's going to take. I think there's going to be some bad news to take us down. And then my guess is we'll get some good news about some kind of drug or vaccine or improvement somewhere from which we'll get a bounce. But wait to see. So along with that kind of hypothesis that we get some kind of flush out, I'm also looking at the bonds. Bonds, to some extent, people are saying are kind of decoupling from the equities market, but I don't think that's the case. I think we'll still get a flush of people capitulating out of equities and running to the safety of bonds. We have definitely spiked in terms of a rate move, and let me show it to you on this chart instead. So this is a useful chart looking at the rates on the 5, 10-year and 30-year bonds and notes. So dollar FVX.X, TNX.X and TYX.X gives me the rates, and you can put it on better sine wave because the rates are also there's no volume activity here, but you can see the cycles in the rates themselves, and we're obviously in a downtrend in rates. Rates have fallen off a cliff. We're down here at 52 basis points on the 5-year, 94 basis points on the 10-year, and 150. And we had this incredible spike down where we went to these lows. And I think we're going to test back into those lows. So we've got to have another kind of final move down there. And the reason why I'm saying that is when I look at this chart, slightly different view of this. This is putting on daily, weekly, monthly data for those three things: the rates on the 5-year, the rates on the 10-year, the rates on the 30-year. And we've had this pullback to end of trend kind of pattern go off on the weekly chart. Remember, when I show you this chart, this is the multiple time frames, and there's a factor of 3 going on. So I put this on a daily chart, and these support resistance lines are printing daily, 3-day, and 9-day. That is different from daily, weekly, monthly. I prefer having the 3 times 3 time frame because it signals quicker. But this is another way of looking at it, a more traditional way of looking at multiple time frames, looking at daily, weekly, monthly charts. And on the weekly chart, we picked off this end of trend. So this is a very important level down here, no doubt about it. But look on the daily charts here, and what we've done is we've had the waterfall decline. We're coming back up to find cyclical cross and another pullback, a final, hopefully, pullback to end of trend move on these daily charts. So that's one. On the 5-year. On the 10-year, same pattern. We're heading back up to find that cyclical cross, to finally have that flush down, which will give us pullback to end of trend. And then on 30-year, same deal, coming back up, pullback to end of trend. So how that happens, I don't know. These charts look like, well, it looks like we've got a couple of days before these kind of force us back down, find a resistance and come back down. And so it looks like we've got a few days to wait, but it could just continue down, and this pattern, pullback to end of trend, is forced to print kind of late in that move, and so that's not the high that's printed. We get a pullback level kind of down here that's kind of late into the move as we test back down. Who knows how it kind of works out? I'll be looking at these kind of daily to see that pattern kind of work out. But what it means for me is I'm expecting a final kind of capitulation, exhaustion sell on equities to be followed or along with this final pullback to end of trend move down on interest rates and therefore spiking up in bonds. And so just to show you the bond chart, this is the 30-year. We've definitely had this spike exhaustion buy kind of up here. We've still got to put in pullback to end of trends on these lower time frames. But I'll show you the 10-year because I think that's they're all slightly different in terms of these timings. So you can see that exhaustion by all these blue professional bars, bang, 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 bang. Getting into this move just as we had that breakout into this trending move here, and then buying the breakout and then taking profits kind of at the high here. But we've had a pullback to end of trend on the lowest time frame with exhaustion buy. Once we put in a bearish divergence signal here, very, very wary of bonds, and at some point start looking for some kind of reversal trade to kind of go the other way. So there it is. That's my hypothesis kind of going forward, is that in my mind we've still not put in that exhaustion sell signal, which will be a real kind of capitulation signal. Scares the life out of me. Whatever news is going to be required or move in the market is going to be required to do that, even though we're down kind of 32, 33%. So hold on to your hats this week, because it's going to get interesting.